See, are we live yet? Let me know there in the chat if we are live. I did click the live button. Just don't know if we are live yet. But I did forget one thing. So while everybody logs in, start joining, hit the like button. Very, very important. Subscribe if you're not subscribed. Let me just boost the Wi-Fi in my computer so we don't lag. Pretty much. I'll give you guys some time to say hi in the chat. Hit the like button. Very, very important. I have a few things that I wanted to talk about real quick. I'm looking at Uber, guys. I'm looking at Uber right now. It is one stock that I have on my watch list. But let me let you guys log in real quick. Join in the chat real quick. And if you're watching the replay, I really appreciate it. Really appreciate all the support. And don't forget to hit the like button. I'm hoping you're having a safe trip, man. On your way back to Colorado. So have a safe trip. Hope you had a good time. Not sure. I think you mentioned, was it for work or was it, just a vacation? If it was, I hope you enjoy your trip. And have a safe trip back. So let's see where we are at right now. And I have a few things that I wanted to talk about today. I did not update my spreadsheet, my dividend portfolio spreadsheet. I did not do that. I don't know why, but I didn't do that before the live stream. So let's see what happens. And then on Monday, guys, there was a dip in the market on Monday. I don't know if you guys took advantage of it, if you guys bought any shares. I was busy. At work. I didn't log in until later in the day. And honestly, man, I didn't buy anything. I only bought my one share of SCHD for the weekly challenge. And I wish I would have logged in earlier in the day, but I had a couple meetings. I had a couple conversations with the team and stuff like that. I didn't buy anything. I didn't buy anything. I honestly didn't buy anything. What's going on, Tim? How are you, man? Let me know there in the chat if you did any shopping in the stock market this week, especially on especially on Monday. Just let me know. What's going on, X? All good here. How are you, man? How are you? Woo, man. Let's see what happened. Let me see how many of you guys are there. There's 7 of you guys there. Only 4 likes, though. Only 4 likes. Don't forget, guys, to hit the like button as soon as you join. Just do me that huge favor. That's all I ask. Just for a like button. That's pretty much it. But let me see. Tim, did you buy your 11.45 shares of Nvidia yet? Asking for a friend. So Tim, no, I didn't. I honestly didn't. And I'm gonna be honest with you. Hold on. I have Uber right here, which is one that I'm keeping an eye on. I'm keeping an eye on Uber right now. SCHD reconstitution happening soon and the dividend. Oof, I can't wait. Love them dividends. Oh, you know what I didn't share? I didn't share a link in my Twitter, my X. Let me just share that real quick while everybody logs in real quick. Hold on. Let me just put a link in here. Because I did forget to post a link though. But let me just do this real quick while you guys, who else is there in the chat? Let me know. How many people are there in the chat? Let me know. There's 9 of you guys there. There's 9. Live. Let me see. Their hours. Let me just put that and that's it. I think that's cool. That's good right there. And let me just put this real quick. I always got to tag in SCHD. You guys know that. And then Amazon. You guys know Amazon got a new partnership with another company that I'm looking at. And I'm going to show you real quick. That company is Uber, which is on my watch list. Oh, hold on. What am I doing? But yeah, let me know who is there in the chat. All right. All right. We're ready. We're ready. We're ready. We are ready. I also, Tim and everyone, I also took some screenshots of my portfolio of on the Fidelity website, so I can show you guys, so you guys can see that I'm very transparent, because I haven't done that in a while. I noticed that I haven't done that in a while. I have not shared a screenshot so you guys can see that what I have on the spreadsheet is true and it's not made up. You know, it's not just made up numbers to try to be cool or try to be anyway, you know, anything like that. So I'm gonna be sharing that with you guys. Oh, what's going on, Em? Good evening. Hope you're having you're not having a you're having a good time, you know, and everything is going well in there. So at the airport, especially, I know how airports can be. But yeah. All right. Let me see. Let me see. X, what's going on? X, good. Got a good deal on VBR today. Nice. Yeah. You told me last time you were keeping an eye on it. VBR, that's the small cap, right? I think it was small cap. Yeah, Vanguard's small cap. Ooh, you're gonna like it even more right now. It's in the after hours. I'll show you right now, real quick. In the screen, and you can see that it's actually down 1% more. And I know you were looking at it in the 220s, right? I think that's what you were looking at it in the last time. So right now 217. Nice. Nice. It's on the downside as of lately. That's what it is. It was like at 230, 231, 232. Yep, in the year to date, let me see, in the last year, still up 17.8%. So still on the upside, which is good. But yeah, that's good. That's good, man. You got a good deal. What's up, Phil? All good here. How are you? All right. So let me see. What do I start with? Let me see. What do I start with? I also have something else. I saw something from the Yield Max. It's the first thing that popped up. So I think I'm going to talk about it real quick. This one is just going to be quick. So let me just open it right here. But let me just show it right here. So Yield Max is launching tomorrow, Thursday. The Yield Max US stock target double distribution ETF. The ticker symbol is DDDD, quadruple D. So it's quad D. Targets approximately double the annualized distribution yield of the Schwab US Dividend Equity ETF, SCHD. So they actually made a ETF, a cover call ETF, you know, to double the distribution yield of SCHD. I don't know if you see right here. Let me show you guys their website real quick, and you can see it right here, the Yield Max US Stocks Target Double Distribution ETF. And of course, if we go right here to the fund details, you can see that the gross expense ratio is going to be 0.99%. So it's going to have a almost 1% expense ratio right here. Now, let me know there in the chat. Are you looking forward to this? Are you looking forward to the Yield Max quadruple or quad D ETF that is going to give double the dividends of SCHD pretty much? Like I think that's what they mean by it pretty much. So I don't know. Seeks to provide double the distribution yield of the Schwab US Dividend Equity ETF and is designed for investors who strive for enhanced income for a high quality dividend equity allocation without fully sacrificing equity exposure. Hold on, let me see something. I'm hoping there's nothing wrong in the chat. Hold on, let me quick. Let me just make sure everything is okay here in the chat. Okay. All right. Everything is cool, man. Everything is cool. I just want to make sure anybody else that is just joining the chat, don't forget to hit the like button. Very, very important. And let me know your opinion on this new ETF, Quad D, ticker symbol DDDD. What do you guys think about this? I most likely won't be purchasing any shares or anything like that. Especially with ETFs that they have like Tesla or anything like that. The NAV erosion pretty much is not it's not very good for your pocket. So I don't know if this one is gonna work for them, but as of right now, it's not my cup of tea. Let's just say that, or my cup of coffee. You know. But what do you guys think? Just wanted to share that. I don't know if there's any YieldMax investors here. If they can create an ETF with stable NAV price, I'd track it for a year before buying. Good point. Very, very good point, Tim. Very, very good point. Very good point. Right there. YieldMax needs to be banished to the shadow realm. Come on, X. Oh man. But yeah, that's gonna be the new ETF that they're gonna be showing there. So let's see. Let me see. What was the other set of news? This one is with Amazon, which it was a new partnership. The CPI data. The CPI data. You see right here. Let me just go through it real quick. Nope, this is not the CPI data. This is it right here. So the report showed that inflation remains steady, but is being pressured by rising energy costs, which is pretty much the crude oil, which is right now. There's a lot of news about the oh my gosh, what's that? Hold on. The Strait of Hormuz. There's a lot of news with that. I know that Iran is not letting anybody pass through here pretty much. That's what is going on right now. This is a Strait of Hormuz right there. So Iran is not letting anybody pass through there with their oil ships. So that's going to continue to bring up the price of crude oil pretty much. So the Fed is pretty much keeping a close eye on that. But the headline CPI year over year was 2.4%, which it matches January and analyst expectations. Headline CPI month over month, 0.3%, up from 0.2% in January. Then core CPI excludes food energy, 2.5% annually and 0.2% monthly. So we got to see if the Fed is going to cut interest rates or not. Is it going to happen? So Federal Reserve outlook, because the data came in as expected, it is unlikely to trigger an immediate aggressive change in Federal Reserve policy. However, the 2.4% rate is still above the Fed's 2% long-term target, which is good. That's a good one right there. Impact on energy prices. Analysts are closely watching the oil shock from the war in Iran, which is what I was just showing you guys. The Strait of Hormuz, which is giving a lot of trouble out there. Some other ones, I've seen some news that they're saying that Iran is only letting pass any ships for China oil, China, or the crude oil that is going to China. Those are the only ships that they're letting through as of right now. And you can see the full impact of soaring gasoline prices up to 60 cents a gallon. By me, it's at 350 something right now. It's like a 350 something a gallon right now. By me, where I'm at, right? Here in the area in New Jersey. So let me know there in the chat, how much is it by you guys? How much is the gallon, the price per gallon in your area? Then there was also the market reaction to the job loss, the job market, they lost 92,000 jobs in February. New York fighting hard for that $30 minimum wage. We need robots desperately. Yeah. Well, life in New York is expensive, man. It's expensive. I'll tell you that. I'll tell you that. What's going on, James? How are you, man? 265. Ooh, 265. Man, that's good. That's good right there compared to here. I'm at 350 something. I think it was like 359, James, where when I was driving to work. It was like 350 something. I heard that the US has dipped into its oil reserves. I don't believe that. Yeah, I don't believe that either. Also, the US went into Venezuela, and I do believe I saw some news that, there was a lot of oil that was taken from there too. So I don't believe that. I don't believe we have dipped into the reserves yet. I'm with you on that one. James, it was 235. Wow. Wow, that's good. That's a good price, compared to New Jersey, where I'm at. But oh man, so 265. Wow. Wow. But yeah, that's the CPI report. Then what else? What else was it? Any stocks? There was one stock I really thought Meta on Monday was gonna open in the 620s and was gonna stay down there for a little while, but it didn't. It actually didn't, But right now it has gone up. It's since Monday pretty much. It has risen from $630, 600, yeah, somewhere around there. Until now $654. And in the overnight it's at 649. So it's down almost 1% in there. But I still think that Meta is not, it's not at a bad price right now. I still don't think Meta is at a bad price right now. I've been keeping track of it, and Meta is still at a 21.3 forward PE and a 27.8 PE ratio. So based on just this multiple right here, So I want to add some more multiples in here, but I know it's going to take me a while to update every time. But I'm only doing it for stocks that I'm looking at. Like Melly is another one, Mercado Libre. Right now it's at a 28.8 forward PE. I like Melly, I like their business model, similar to Amazon. I know Amazon is expanding more and more, and they're expanding in South America too. I have a set of news also, but I really like Mercado Libre. They have been growing their revenue very well. What's going on, Boogie? Hello, Jay and everyone. Nice to see you there in the chat. And don't forget to hit the like button, guys. That's the only thing I ask for. Please, very, very important. Just hit the like button. That's all I ask. Nothing else in return, and that you guys watch, of course. And also, just put in there in the comment section, did you make any purchases this week? On Monday, did you make any purchases? What stocks did you buy on Monday? Let me know there in the chat. And let me show you this real quick. Is the next thing. And Uber stock rises as new Amazon robo-taxi partnership is a positive surprise. I like this, because this is like robo-taxi right here. Amazon Zoox still needs regulatory approval to use its custom-built robo-taxis for commercial use. So as you can see right here, it looks pretty cool, actually. It looks pretty cool. The robo-taxis that they have. You can see that they open up. They have a door in the middle. They just open up, and you have, front to front seats pretty much. So you can see, I'm guessing, whoever you're going in with. And especially if you're going with other people, like family members or anything like that, I think it looks pretty cool. And hold on. Oh, that's later. Hold on. Yep. So this partnership is an opportunity right here to continue advancing the use of autonomous mobility in daily life. What's going on, Thrill? What's up, Jay and fam? Nice to see you there, Thrill. Through our collaboration, Zoox will provide a differentiated rider experience to those who already know and love the convenience in riding Uber. I honestly didn't read this. Hold on. So I honestly didn't read this before, but its fleet has driven more than 1 million autonomous miles and served more than 300,000 customers, the company said on Monday, according to the company right here. And this one is owned by Amazon. That's why I'm so bullish Amazon. And I need to buy more shares of Amazon. I gotta buy more. I wanna make it my second largest position over Meta. I have a stronger conviction on Amazon than on Meta. I do like Meta long term. Not saying that I don't, but I do wish I had more money that I can put on Amazon. Honestly, Zoox hasn't been cleared. Use its robo taxis commercially. On Wednesday, federal regulators began taking public comments on Zoox applications for a series of exemptions. The requested 2-year exemption will allow Zoox to make and deploy its vehicles for interstate commerce. So that's good right there. Then I think I saw, let me see, it's early and the safety scalability is still to be proven out. The analyst said in a note to clients, nonetheless, we view this as a positive development for Uber. Although the deal marks Zoox's first third-party partnership with platform like Uber, is just one of over 24 for the ride-hailing company, which aims to offer driverless rides in 15 cities this year. So, yeah, look at this. It's gonna expand to 15 cities right there. So I don't know. I like Amazon long term. Love the business model. Love how diversified they are. And honestly, I think it was Tim that didn't see this right here. But I gotta look for an updated one. But yeah, but this is pretty much brands owned by Amazon. And I don't know if Zoox is here. Oh, yes, right here. Zoox. So it's right here, devices and services, right here at the bottom. So you can see how diversified Amazon is. And I almost deleted this, but it was good that I didn't delete it. But I really, really like Amazon long term. Look at how diversified. I feel like Amazon is like a new Berkshire Hathaway, pretty much, because of how many businesses they have, in their portfolio, pretty much. They're not only an e-commerce company. And honestly, I really like Amazon long term. I really like it long term. Do any of you guys own Amazon? Let me know there in the chat if you guys own any Amazon. And if you see right here, it is at 210 in the after hours. It has stayed like in the 205, 210, 215, somewhere around there. It has stayed at, and you can see in the after hours is down to 210. I have $50 in my growth portfolio, which I want to save them so I can build up a nice cash position and see if maybe Amazon will give an opportunity soon. But you can see in the last month is up 4%, 4.2%, but in the last 6 months it's still on the downside, 7.5%. Year to date, almost 8%. Last year is pretty much only up 8.1%. But I don't think that this is like a company that you will swing trade right now and just be like, okay, it's gonna get to 250, 300, 275 or $300 in the next couple of months. But I think long term, I'm looking at Amazon 5, 7, 10 years from now. I think this company is going to be huge and it's going to take much, much more market share of other companies. Let me see. Amazon is my numero uno flat in the portfolio. Nice. Long term thrill. I think it's a good choice, Amazon. I like it a lot. I know, I feel like later on, and this is just me, I do believe that later on I'm gonna be like, man, I should have bought more Amazon. But as of right now, I'm gonna take my time building up my position. It's at 212, 210. I have $50 in the growth portfolio. Maybe I'll spend it on this. I'm still being careful because the war is not over yet. Then there's that trouble with the Strait of Hormuz, with the oil. So I know that's gonna boost prices of goods pretty much, because remember, everything gets transported by trucks, by boats. So what does that use? Pretty much oil, gas. That's what it uses. So with the prices going up, shipping is gonna go up. That means the prices of goods are gonna go up. So I don't know. We might get another opportunity. I'm being a little bit bearish on the market right now. So we might get more opportunity. We might not. We might run up. Maybe tomorrow Trump is gonna say, "Hey, the war is over," and then the market just goes up. But as of right now, I'm just a little bit bearish. I'm being careful. I'm still taking my time, honestly, on Amazon and some of the other companies. Uber scared. Cybercab coming for that market share. Which one is Cybercab? Is that Tesla? I think it's Tesla, right? Because that one does I like Tesla too, long term. I need to go back into Tesla. I used to hold a share in a share and a fraction of a share, and I sold it like at 100%, gain. It wasn't that much. It was only like whatever, $100 that I gained. But I want to get back into Tesla. I kind of like Tesla a little bit. I created more FOMO for me. Thanks, Jay. Oh, man. None of this is financial advice, Tim. You know that. Uh, I'm just saying what a friend told me. But yeah, no. Well, I'm just I like it long term. I really like Amazon long term. I don't know how you guys feel. What's your opinion on Amazon? What's your guys' opinion on Amazon? I keep on seeing more and more news on Amazon, expanding. And I know that they have a lot of capex spending this year in Amazon, but it's because they're expanding more and more. The data centers too. AWS growth continues, and pretty much the revenue continues to grow. So I don't know. I like it. I like Amazon. What's up, KC? Hit the like button. Yes, please don't forget to hit the like button. Very, very important to hit the like button, like KC mentioned. Sam, what's up, everyone? Picked up some V today. Nice. Nice. I looked at it earlier, Sam, and it was, actually, it went down even more. I have a few dollars in my portfolio. I think I'm gonna buy this tomorrow at 306. I think this is a good opportunity right here for me. Wow, looks good. Thank you, Sam, for bringing it right there in the chat. I really like Visa right now. Visa at 308, 306. Let me see. I have it right here. Wow, it's at a 23.6 forward PE. I think that's pretty low based on their 5-year average, I think. I gotta take a look, but it looks good. I'm in between classes, so can't come on for a little bit. Okay, all right, thanks. Let me know there in the chat. What did you buy this week, Casey? Did you buy anything or you didn't? How's the portfolio? Let me know there in the chat. And but Visa, yeah, good pickup, Sam. I like it. I like it. I like it. I like it. I like Visa. I like Visa a lot. 0.87% dividend. Market cap $588 billion. I think this is a good opportunity right here. Let me see what they're forecasting. I have Uber right here. I was taking a look at the financials on Uber, which we can take a look at it in a second. But let me see the forecast right now. They have a low of 330, an average of $399 in the next 12 months forecast, and then a high of 450. Wow. You can see that revenue growth expected for this year 13%, and earnings per share growth 28.5%. Wow. Even if it doesn't come up to 28%, even if it comes up to like 20% or something like that, that's still very good earnings per share growth. I still bring the forward PE they'll probably bring it to like a 25 or something like that. That's still good. That's still good. I like Visa. Nice pickup. The payment from eBay for a $257 card sale came through to my bank, and I bought 5 shares of SPYI last night. Ooh, nice. Increased its monthly payment by $2.54 to $71.62 of monthly income from KC, man. KC, that's awesome, man. I really the hustle with those cards, man. You know, it's coming through. It's definitely coming through. I really like that. I really like that, man. Oh, you're killing it. Yes, he is, man. Yes, he is. Selling all those cards, making a lot of, making some nice money. And then, you know what I like the most is that you're putting that into investments and he's making you more money. There's nothing wrong with that, man. Nothing wrong with that. But wow, another $2.54 there. 2D portfolio. Thanks from KC. Yeah, no, you're killing it for sure. For sure. But Visa definitely looking good. I have about 14 cards up for sale, but no sales in the past week or so. Wow. But yeah. Yeah, man, you're killing it. You're killing it right there. Exactly, Jay. Thanks. Yep. Yeah, man, you're doing good. You're doing good. Especially moving it into assets, pretty much. Just building up your assets. And those were assets, pretty much. You know, those cards were assets because now you're making money out of them. So, but yeah, in SPYI sounds good too. It's on my watch list together with JetQ. But yeah, Visa, nice pickup right there. I like Visa. I've seen a couple of people on YouTube also buying Visa. Sam, they have been buying Visa at current levels right now. And I like it. I think I don't know how much I have in my dividend portfolio. I do have some money there though. I don't know if maybe I received that dividend or something, but I think I have like 20 bucks. So I think I'm going to put it into Visa tomorrow at 306. Let me see if I can put like a limit order or something. So I don't forget, because I have a meeting at 9:30, which is when the market opens pretty much. Yeah, I always have a meeting at 9:30, right when the market opens. VGT, Vanguard's Information Technology ETFs at 735. If this ETF goes down to like 700, oh man, I would love VGT in the 700 or lower. Let me see. In the year to date is down 2.5%. You can see was this as low as 708 this year so far. But I like VGT a lot. Now let me see with the next set of news. Let me see what else did I have for you guys. So it was Zoox, and then let me show you guys this. This is from my newest acquisition, Netflix. I like Netflix. I like Netflix too. Netflix will pay as much as $600 million for Inner Positive, the AI movie-making company founded by Ben Affleck. According to people familiar with the matter, making the purchase one of the biggest ever by the streaming leader. So this company made by Ben Affleck, which is called Inner Positive, is buying Inner Positive to accelerate the use of artificial intelligence in its filmmaking. So in this company, they have created some special effects with AI that now Netflix can use pretty much. And, so now this is going to benefit Netflix in the long term, especially with editing or anything like that in their movies. I kind of lost my train of thought. But yeah, but this is a nice acquisition here. And Ben Affleck just sold his company $600 million. So that's pretty good right there. The startup has developed a suite of tools that allow filmmakers to alter existing footage. David Fincher has already used the products on an upcoming film starring Brad Pitt. Oh man, so there's a new movie coming up with Brad Pitt. The acquisition is also one of the largest AI deals by a major Hollywood studio. Companies such as Netflix and Amazon are increasingly experimenting with AI technology to cut production costs. and improve the quality of their work. So this is going to help them in the long term. I'm sure the ROI is not there yet on this. Probably they probably don't have the numbers yet, but I'm sure it's going to help Netflix and some of these companies in the long term. Netflix also is now adding more and more fights. I think what's her name? The one from UFC, Ronda Rousey. She's fighting on Netflix also. And what's his name? This guy, a big guy. He can hit. Oh man. I forgot his name, but I'm gonna think about it. I'm sure I'm gonna come up. But he's also, I believe he's also fighting in those fights. So that looks really good. Amazon has created an in-house team to deploy AI across its film and TV work, while Walt Disney struck a commercial partnership with OpenAI. So OpenAI is helping Walt Disney. Now Netflix have their own with Inner Positive right here. So this is gonna be a positive, a plus for Netflix to make some movies and help them with the editing and altering their existing footage and all that. So that's going to be really good. This is a good acquisition for Netflix right there. And I'm glad I picked up my shares in the 80s. And I think I picked up one share at $79. I wish I would have had more money, to be honest with you. I wish I would have had more money to buy more Netflix. I wanted to have like 15 shares at least. Oh, what's going on, Finanzas con Estilo? Market is a roller coaster the past 3 months. I agree 100%. It has been crazy. But, you know, one thing I have learned, you know, from your videos is like being patient. Gotta be patient and let the price come to you. And sometimes, like this week, I was gonna buy on Monday, but when I logged in, it was later in the day. So I'm like, nah, you know what? Let me just calm down. Let me just let the market, you know, do its thing. It was recovering. It was pretty much almost in the green, or it was in the green already from the dip that it took on Monday. So I was like, you know what? Let me just not do anything. Let me just calm down. Let me let this day and the next day just pass through. Let's see all the sentiment out there, all the emotions. Let me just let everybody, all the investors, just go through them and buy whatever they need to buy or sell what they need to sell, and see if there's another opportunity coming up soon, especially with the war keep on going on. I think we're gonna get some more opportunities. Maybe I'm just being too much of a bear right now, but I think we'll get some opportunities. And look at Visa, it's at 306 in the after hours. So I think I'm gonna put some more money into Visa tomorrow because it looks good. It looks good right there at those current levels. JPM is down 5% in the past month, down to 287. I might buy 3 or 4 shares on the 26. I haven't bought it in a while. Let me see. Let me take a look at JP Morgan Chase real quick. Banks in general have been on the downside as of lately. If I show you, hold on, let me before I show you. And I'm lucky that I moved on from Bank of America when I did, because it was still in the 50s. And if you see, Bank of America right now is down another 1.1%. But in the year to date, it's down 12%. So I pretty much got lucky. I sold in the 50s. I think it was $52, $53 in that range. I sold, and it was over 80% in gains in Bank of America. So I kind of, you know, I had good timing. But banks have been down as of lately. Now, what's JP Morgan's price to book? Is JP Morgan at a good price to book? That will be a good metric to take a look at. Hold on. JPM, come on. Or maybe I should look at it in... let me see. So it's at 287. It's at 284 in the after hours. So another 1%. And then let me see. In the... Ooh, it's down. Yeah, almost 11% also. Now it is in the 287. So yeah. Dividend yield is at 2.09%. So a little bit over 2%. So that's good. PE ratio shows right here 14. I wonder what the price to book is. I want to go back to Uber though. I'll probably go back later. Let me see their financials. Quarterly. Let me see the ratios. Their price to book is still a little bit pricey. Still at a 2.2, but I think this company usually trades at a premium. Such a great bank. You know, so it's still at a premium, but, you know, yeah. But if you have a position already, though, look, in the last 6 months, it's down 4%. In the last year, it's up 23.8%. This is a great bank, honestly. And it's on a nice dip right here, right now. Maybe by the 26th, you'll have an even nicer opportunity. Look at the PE ratios at 14, forward PE of 13. Price target, 15% upside from here. Let me see what they forecast. Analysts are forecasting a low of 285, which is the price where it's at right now. Average 330, and then the high 391. Let me see. Revenue growth expected 17%, and earnings per share 9%. So that looks good. That looks good. But yeah, if it's one of your long-term companies, if it goes down even more, that would be great. Got the dividend yield right now. And it sounds like you probably hold it, right? So you probably have an even better price per share. Let me see. Tim, I saw an AI video of the Dinobots fighting Devastator on Facebook. It was pretty crazy, and it was a few minutes long. Yeah, I've seen a few. And my ankle. Ankle itches. Yeah, I've seen a few. You know how people are making pretty much videos with AI. And I don't know if you guys have noticed, but my thumbnails as of lately, I've been making them with AI. So I don't know if you guys have noticed, but some of it is AI. You know, the background is pretty much AI. That's how I have been making my videos as of lately with AI. Pretty easy. I made my thumbnail, the thumbnail that I used today, I made it in like, whatever, 1 minute. No, I'm lying. Maybe less than 5 minutes for sure. Less than 5 minutes. And then because I got home, I opened the computer. I started working. I took a screenshot real quick. Boom. Put it on AI. Boom. Just did something. Then I moved it to Canvas and I put some words on there and that's it. So pretty quick, pretty easy, very easy. AI is good, man. We're using AI also. We're using Anthropic's Claude work, and I'm impressed by it. I'm impressed how it helps with Microsoft Excel, how it has been helping us at work. So yeah, AI can. Now I know why a lot of investors are scared with Adobe, because when you use some AI, it is pretty much a little bit easier to do some editing though, but not everything though. Some of the things you gotta prompt it like very detailed, you know, like with this and the hair like this. So you gotta do like a very, if you want something very nice or very detailed, you have to prompt a lot, you know, for it to come out like that. So, but now I know why a lot of people or a lot of investors are scared with Adobe and some of these other companies that do any editing. But I think Adobe and those companies will benefit from AI in the long term, because there's still things that AI cannot do. You know, that they need. AI is an agent, right? There's an AI agent, so they need pretty much like what analogy can I use? Like a car to drive. You know, so that would be the software. But some of these software companies, I think, will benefit from AI in the long term. After existing footage, the anime industry needs that for bad adaptations. I think JPM, GS, I think is Goldman Sachs, and MS will be solid banks for a while. Yeah, no, for sure. Goldman Sachs is another one. Yeah, Goldman Sachs is at 800 something dollars. This, yeah, you know what? You're onto something here, KC. I think right now the banks are on the downside. Pretty soon, like if they continue to go on the downside, pretty soon they some of these might be a very good opportunity to add. To start a position. I know banks are a little cyclical, so they have some times where they go down, they go on the downside, even though the revenue, look at Goldman Sachs, revenue trailing 12 months up 13.9%, net income 20%, and earnings per share 26%. So those look like very good numbers right there from Goldman Sachs, and it's still down almost 7% in the year to date. So if banks continue to go down, they might bring a nice opportunity like the way I got, like the one that I got with Bank of America. Because I did get a good opportunity with Bank of America before. That's when I made a nice purchase. I only put like $800, but that was a lot for me then. My portfolio was much, much smaller than it is now. But it was, where was it? Right here? No. No, I think it was, where was it? No, it wasn't 2022. I think it was right here, 2023. This is where, yeah, I think it was right here. 2023 it was like around $27, $28. That's where I entered. And then you can see that the rest is pretty much history. You can see that it was up. I was up 80% on my position from here, from the lows right here. I think it was in April. This is when I bought it, like in April of 2023. And it was like in the 20s. So I don't know. Banks might be coming up with an opportunity now, or similar to the one that they had April of last year. There was also a nice opportunity there. You can see that banks took a nice dip, like for example, this Bank of America. So you're onto something, KC. Maybe there will be a nice opportunity for some of these large banks. So yeah, that looks good. I sold 56 ARC today. ARCC. What is that? Ares Capital Corporation. I don't think I ever looked at this one. I think there's a dividend cut coming. I may put all the money from the sale into SCHD, bringer of dividends. Nice. And how much SCHD do you have? Don't I have you right here? And I have a couple more comments that I gotta answer in the SCHD video. So I don't know if you're in there. Maybe I did answer, because last night I did answer to some though. Last night I did answer to some of the comments. Let me see. I have you at 125 right now. Is that your total share right now? Yeah, I have you 125. I think I did answer you, right? Yesterday? Did I? Or maybe I didn't. But yeah, bringer of dividends. Yeah. That's a nice move. I like SCHD. I like SCHD a lot. One of my favorites. I gotta show you guys also a screenshot of my portfolio. I gotta show you that, guys. So you guys can see that I'm not lying to you guys, that I'm not just showing you numbers on a spreadsheet. I'm gonna be showing you a screenshot. But just give me one more minute. One time while I was still working, I got AI to create an image in Garbage Kids style to create a card for Lurking Linda. She was a manager who had a severe power complex. Left the image on her desk. Wow, Tim. Wow. Man, what a use of AI. I sold out of ARC a few months ago, almost 200 shares. And what's his name? Bringer of Dividends said that there might be a dividend cut coming soon. This is a real estate company, right? Wow, they haven't grown their dividend since. Oh, wow. And they cut it in 2023, though. So in 2023, let me see. Yeah, they went from 51 cents to 48 cents. And they have been paying 48 cents since. 10.3%. Let me see. Free cash flow. This is a REIT, right? Hold on. Let me see. Oh, no, it's financials. Financials. The price to book ratio says 0.93. I don't know why. Price to free cash flow is in the negative. Hold on. Let me just do this real quick. This might be deceiving. Forward PE. Okay, and PE ratios are 9.9. Let me see the revenue. Kind of, they're slightly growing their revenue right now. But I understand what you're saying. You know, the payout ratio was pretty high. They're also diluting the shareholder. You can see it right here, 716 million shares. Earnings per share has been going down as of lately, 41 cents. So the earnings per share growth, yeah, has been in the negative. Not a good sign. Free cash flow per share is negative 60 cents. Profit margin 36%. Free cash flow margin, look at this, negative 53%. Yeah, so I understand you 100%. Yeah, might not be sustainable. Yeah, I see what you're saying, what you guys are saying. You got fired. 2 weeks later, she tried to find out who made the image. Well, hopefully she's not one of the subscribers here. She didn't see these. But yeah. All right, let me see. Finanzas con estilo. Amex, Visa, MasterCard, pick two. Myself, I think, oh man, that's a good one. Just because Visa and MasterCard are so similar, I might need to go with Visa and Amex, or Amex, American Express. I think American Express is gonna. Yeah, right here. Right? This is the one that you're talking about, right? American Express. So it's at $302. Let me see. In the year to date, it's down 17%. Wow. I know that they also issue credit, American Express. But look at this. PE ratios at 19, 4 PE at 17. Let me take a look at the last couple of years. PE ratio. Oh, look at that forward PE is on the downside as of lately. In 2022, 2023, yeah, this is when companies, I guess, took a hit in 2023. So the forward PE was much lower, but you can see that it had recovered very well. Now it's at the last year's forward PE levels. It looks good. Let me see, 19.9. Well, this one, we need to take a look at the price to book, right? For this one, or no? It is at a 6.2, so pretty pricey, but this is such a great company, man. This is a great company. I think I'll be willing to pay the premium, though. Let me take a look at the revenue growth. Look at this. Woof. Growing and growing and growing. The revenue, so it's always growing like at least 10%, I will say, year over year. They have been growing their revenue, so operating income, positive. Let me see the shares outstanding. Ooh, buying back shares. This is what you want to see also. Not diluting the shareholder. I like this one. I think I would choose, if I have to pick two out of them. Not saying that MasterCard is bad, because I think all three companies are great. I think, to me, all three companies are great. But because I like Visa already, I think I will pick Visa and Amex, and American Express. I will have to. Earnings per share, $3.53. Let me see. The gross margins is 47%. It has slowed down. Has gone down, the gross margin. Operating margin is at 17%. That still looks good. Profit margin, 14%. Oh, I would think the profit margin would be a little bit higher. Free cash flow margin is at 13%. It has gone down as of lately. I don't know the reasons why though. You know, there might be reasons behind it. But I like it. I like this company. I like American Express. I don't think American Express is gonna go anywhere anytime soon. And to be honest with you, you know, is AI gonna disrupt American Express? I really don't think so. I really don't think so. Yeah, look at the free cash flow, 2.35 billion. Just gotta take a look a little bit deeper in it, but I like American Express. Let me see the dividend. Dividend is only 1%. Only 1% yield, but payout ratio 22.1%. So they have plenty of room, you know, to continue growing their dividend and paying it. They have grown their dividend 4 years. Dividend growth 16.7%. This one looks really good. And they just increased their dividend. So ex-dividend day, April 2nd. So I'm guessing if you're looking into adding, it will be good to add it before April 2nd. So you still got like a couple more weeks. So you could pay so you could get paid in May. And honestly, I gotta start taking a look at this one because it pays in August, November, February, May, which is months that I wanna grow my dividend. I know it pays a low dividend, but with a 16% CAGR, look at this. You know, 15%, 17%, 16%. Nothing lower than 15% CAGR. That's just great, you know. They're in their dividend growth department. I don't know. I might need to start looking at this one, even though I do have Visa already, but and to get into a financial company like this one. But I like American Express. I like American Express. I don't see why not. None of this is financial advice, guys. You gotta do your own research. I'm not a financial advisor. Always gotta say that for YouTube. I don't know why, but I'm sure you guys know already that I'm not a financial advisor, but this one looks good. This one is really good. And down in the year to date, 17.2%, you know. Yeah, it's on the downside as of right now. Gotta keep an eye on those financial companies. They might be taking a good dip right now to yeah, they might be taking a good dip. Same for OBDC. Okay, you sold it. Yeah, 225 shares of SCHD from Burger of Dividends. Yeah. Interest rate increases killed BDCs. Yeah. Main Street Capital, that's why I like Main Street Capital. It's still so strong as a company. AXP has the best CAGR of those options, although it's the riskiest. Yeah, because they do issue shares. Issue credit pretty much. That's the only reason why, but I'm gonna be honest, they only issue credit if you have really good credit. So their customers, American Express customers, are high earners, high income earners. So you're most likely not to have many customers that go into default, right? Am I right? Or what do you think? American Express doesn't give you a credit card, doesn't issue credit to you if you have like a 600 credit score. You know, I started getting credit cards when I was like in the 7 something, you know, and now I'm in the 800 credit score. So I get American Express all the time. I don't have one yet. But if you see also wealthy guys, like wealthy individuals, this is what they use, American Express. So it's very difficult, I guess, to go into a default with an American Express, especially with their customer level that they have. All right. I agree with you. Visa and AXP, the best of both worlds. Yeah. I like both. You know, and Visa also, you know, American Express is very high on high earners, high income earners. Visa too, they issue a lot of credit cards. They're expanding, they're buying companies. Even in the, what was the last news that I gave a couple weeks ago, I showed that they acquired some more companies in South America too. So they're expanding more and more. And remember, some of these companies, and that's why I'm long Visa, and I'm gonna buy more tomorrow. I have to buy more tomorrow Thanks to Sam that told me about this. Uh, but look at this. It's under $310. Gonna buy more Visa tomorrow. They continue to expand. And in South America, in some of these countries that they don't have maybe as much technology um, as the US or anything like that, they are progressing now. They are evolving. They're having more and more places where you could pay with cards. And I know Visa is expanding more and more together with MasterCard too. So they are not only in the US. That's what I like about Visa. That's why I like about Google. That's why I like about Meta, Amazon, that they're not just in the US, they're just international. So by Visa expanding into these countries, that they are now evolving, with the time, and they're now issuing more cards out there. There's more people adding or putting money into their bank, so then they get issue a nice Visa debit card, so they could go pay into the corner store down there or any other places that are gonna have to evolve also with it, with the time, because in the future a lot of things are gonna be paid with cards, and Visa is gonna be Visa together with MasterCard, together with American Express, are going to be the big companies that are going to own a lot of the market share, because they're so big already. They have their system out there already, that for another company to compete, I don't know, it's going to be very difficult, because Visa, their transactions are done in seconds, just because they're so expanded. Their network is so good already, that they're just gonna continue to be great. I think, in my opinion, I don't think they're gonna get disrupted by AI either. I don't know how AI is gonna disrupt this company, but I like it long term. I like Visa long term. A great CAGR for low yield growth. Stock is different for a 50-year-old versus a 30-year-old, right? Yeah. Yeah. Um, yeah, if that's what a lot of investors say, that, when you're, I'm guessing, up in age, right? In the 50s, 60s, anything like that, a higher yielder will be better. So you could get some of that nice dividend income higher, because at a low yield like this, and even though it has a high CAGR, it's going to take, for you to have a nice higher yield from some of these companies, it's going to take 2 decades at least, I would say. Compared to like SCHD that has already a 3 point something% dividend yield. Not the same as American Express, but it has some very nice CAGR also. Even though at times SCHD can grow their dividend very well in the double-digit percentage. But, those have higher yields, so you'll get paid more, in the short term. But yeah, that should help 50-year-old. Or at least my opinion about that. If I was 30, I'd be buying the heck out of AXP. yeah, I like American Express, but they also have a nice growth in price, the share price. Because of my age, 50, and a little money I make, I don't feel investing in the 1-2% dividend yield growth stocks with a high CAGR is right for me. Yeah, whatever works for you. As a mid 50 investor, I just buy more T Rowe and Prudential. Yeah, so higher yielders, higher yielders. Yeah, I have a little bit of both. I have another one, Melly or Amazon. Oof. So Finanzas con Estilo, I like both, and I've been doing a little bit of research on Melly. I haven't written anything yet. But I do like Melly though. I like Melly, how they're expanding. I'm gonna show you the numbers, but if you see right here, even at $1,700, I shared their PEs at 44, but the forward PE, which is what is forecasted, is not something that is guaranteed, but it's at a 28, and they have some good growth. Mercado Libre, they're still expanding, but also Amazon is expanding in Brazil too. You know, so they are expanding in Brazil, but I really like Meli. I really like Mercado Libre. Revenue trailing 12 months, 39%. You can see it right there. Net income 4%, earnings per share 4%. Let me show you real quick in numbers. Yeah, so the revenue, look at this in the last quarter, 8.7 billion. So that was Q4, and it was a growth of 44%. So they have been growing their revenue more than 35%. As you can see right here, year over year, every quarter. So, and it started accelerating once again. You can see in Q2 of 2025, it was at 33%. Then it just went up to 39, then now 44. So this is another company that is expanding. They only have two segments though. They only have, tell you right now, not the ratios, not the KPIs. Yeah, so they only have e-commerce and fintech. That's all they have right now. But you can see, the growth in both right now, which is a $16.3 billion in e-commerce and $12 billion in fintech. This one, I've been thinking about adding it into my Roth IRA, but I don't have that much cash though. I don't have that much cash just because this one is an international company, if I'm not mistaken. So I don't want to pay those international taxes, but I haven't done my research yet though to see if I can avoid any taxes, by adding it into my Roth. So don't quote me on that just yet. But you can see the revenue growth, 44%. Operating income, you can see the growth also, right here, 889 million. Shares outstanding pretty flat. It's at 50 million shares right now. Earnings per share, you can also see the growth right there in the earnings per share, $11. And let me see their earnings per share growth. Yeah, it has been, but I'm okay. I'm okay with that. Let me see the free cash flow growth, 82%. That's crazy. Free cash flow per share. Look at this, 94. 94. Gross margin, 43%. Operating margin is pretty low at 10%. Profit margin, 6%. That's pretty much it. Free cash flow margin is at 54.6%, but I do like this company. If I have to choose between both, I'll have to choose with Amazon though. I have to go with Amazon just because there's so much more diversified as a company. They just have so much, and I know that they have a lot of capex spending, but Amazon, I think long term it's gonna perform well. I'm trying to find the words that I want to say for Amazon, but I think long term, 5, 7, 10 years from now, I'm probably gonna say I wish I would have bought more. To be honest with you, that's what I think. But Mercado Libre also looks good. I like Mercado Libre. It also looks good. Good growth, good revenue growth. They're also expanding. I like Mercado Libre too. I have Amazon over Mercado Libre, but Mercado Libre is still good. It's still a good pick. I think both of them are good picks. I just bought T Rowe and Prudential. T Rowe is new to my portfolio. I have 9 shares. See what T Rowe price. So it's right now at $89. Let me see. Is this one also getting hit? Yeah. Down almost 13% in the year to date. PE ratios at 9, forward PE at 8. A financial company. Ooh, dividend 5.8%. That looks good. That looks good. Let me take a look at the ratios real quick. Let me see. The price to book ratio is going down. It's at 1.8. So, looks good. Price to sell at 2.6. Yeah, the PE ratio has also been going down. So this might be a good opportunity to buy some T Rowe. Yeah. They have been growing their revenue as of lately, the past couple of quarters, as you can see. They took a dip in 2022, but since then, slowly, and I'm sure it's probably like in the single digits, they have been growing their revenue, which is a positive. Operating income 471 million. Let me see the shares outstanding. They're buying back shares too. Earnings per share is at $2. Earnings per share diluted is at 199. Let me see their growth single digits. Free cash flow is in the negative. Probably something happened. Maybe they just needed to pay something. I would just do my research on that. Let me see. Gross margins 50%, operating margin 24, profit margin 23, free cash flow margin -4. I'll just look into this one a little bit more, but I don't know. It looks good. Roll that 447. See the dividend. Ooh, payout ratio is only 55%. That looks good. 5.82% dividend yield. 2% because this is a higher yielder. Only has a 2% dividend growth, but that's still good. Oh, wow. In June, they paid a special dividend, $3. I'm guessing every couple of years, if they do good, they pay a special dividend. That's a lot. $3 right there. Since then, because of that dividend, that's why it just throws it off, in the growth right here. But they have been growing their dividend as of lately a little bit more, 2.3%, 2.4 from 1.6. That special dividend though threw it off. That's what it is. So, don't judge it based on this one. But it looks good. I don't know much about the companies. I can give you more of an opinion, but looks good. KC, every purchase you make, I think, wow, I need to buy more like you. Oh man, I thought about T-Roll last year when it was around $100, but didn't pull the trigger at 89. At 89 now, wow, nice. As long as he doesn't tank and keeps paying his dividend, yeah, true. Bringer T-Roll is paying its dividend this month. I'm receiving $78 dripping, nice. Good time to drip too. Lock in that sweet 5% yield, yeah, nice Bringer of dividends. Casey, thanks. I always look forward to payday so I can invest more. Nice. That pays my water and electric bill. Oh, man. LOL, that's good. With one paycheck, I can get a dividend of $15 a quarter with T-Roll. Nice. 2 checks to get to $30 a quarter will be nice. That's good. Anyone else here have poor family health history? And would you consider this when making investment decisions? Good question. Yes, I'm insulin dependent, diabetic for 35 years. I invested to get out as soon as possible. Wanted to have some able-bodied years to enjoy not working. That's good, Tim. That's why you retire already, which is good, man. Gotta enjoy life too. It's not only like just working. Right now, I work like 60 something hours. 60 something hours a week. So I understand you, Tim. I'm barely home. I would love to be home more, working in the house, doing more things around here, cleaning the cars, working on the cars, things like that. So I understand you 100%, Tim. In the upcoming years, and hopefully you and others will stay subscribed, I'm going to start thinking about stuff more higher yield, later on in the upcoming years. I also would love to grow my dividend income, to be honest with you. It's less than $1,000 in a year, so I wanna grow it even more. That's why I've been buying Main Street Capital, and I'm gonna continue buying Main Street Capital so I can boost my dividend income. And then maybe also Meta long term will give me some nice dividends. Or it will give me some nice growth that I can then rebalance the portfolio and, just take some of those gains from Meta and put them into something else, higher yield. That will be a good one right there. But yeah, let me see. There's 15 of you guys there, only 11 likes. Please don't forget to hit the like button. That's all I ask for. Just hit the like button. Very, very important. Let me see. Tim is number 1 right here. Bringer of dividends number 2. Wow. Let me see. Korean T Rowe is a solid dividend stock. And if you play it right, you buy now and sell when you get to 15% gain compound that with the dividend, and it's a solid stock. Oh, nice. Type 2. My yearly medical checkup was last week. My RBS resting blood sugar is 103. I think 126 starts type 2 diabetic. I need to watch it. Yeah. I did the 52 to 60 hour work week for a few decades. I invested almost every dollar of OT into the market. Wow, nice. I just started learning investing, a couple years ago. I wish I would have started learning more years back, when I had less expenses. Let me show you guys real quick a screenshot of my portfolio so you guys can see that I'm very transparent in my in here. Let me see. Yep, I think I have everything here. Yes. Yeah, so I'm gonna show you guys my my portfolio real quick so you guys can see that I'm very transparent. This is a screenshot from the Fidelity account. And I have the dividend and the growth portfolio. And you can see right here on your screen, guys, SCHD at the very top. I have 387.2 shares right now. Current value, $12,000. You can see it right here. So my average cost basis is $26.71. I'm up 16%, which is $1,600 in the green. Then you can see that Meta is at $654 right now. I'm up 1%, which equals $41. And it's 8% on my dividend portfolio. You can see that the average cost basis is $644. So that looks good. Realty income. Right now, 35.7 shares. And you can see that my average cost basis is at $55. Current value is at $2,300. I got almost $2,000 invested. I got to buy more realty income. Procter & Gamble, I got 13 shares, as you can see. $147 is the share price. I'm up 4%. Vici Properties, 63.4 shares. I need to get to 100 shares of Vici Properties, to be honest with you. $29.54 is my average cost basis. I'm down 3% on that position. It's back down in $28. Visa, I got 5.8 shares. Need to buy a lot more, to be honest with you. And my average cost basis is $291. So my current value is $1,800. I'm up $99. Johnson & Johnson, $155 cost basis. The share price at $242. So I'm up almost $1,000 in my position, 56%. FXAIX. FXAIX right here, 8.4 shares. I almost did a swing trade on this one and sold my S&P 500 and bought NVIDIA, but I didn't. I don't know if I'm going to regret that, but I could have done it on Friday. On Monday, I mean. We mentioned it last week. So let's see what happens. But I'm up $400 on that one. Main Street Capital, 18.7 shares. I'm buying as of lately. I got to buy more. I'm up 39% because my average cost basis is $40. Then you got Pfizer, PFE. I got 23.5 shares. I like their higher yield dividend. And I'm not selling just yet. Maybe in the future. Coca-Cola, one of my favorite companies too. 8.6 shares only. I only got $500 invested in it. So you can see that I'm up 31%, $160. Then we go right here to the bottom in my growth portfolio. I have Amazon, 10.4 shares. I'm not done buying Amazon yet. I gotta buy more. I gotta buy more Amazon. And I'm up 6%, $129. I need to buy even more. iShares Bitcoin Trust. I'm at 26 shares. Bitcoin has been running up in share price as of lately. I gotta take a look at it. But I'm still down $400 almost in this position, down 26%. Then Google, 8.2 shares, another one that I don't own enough. I don't own enough Alphabet. And I'm up 86.8%. So total gains $1,100 in this position, but I don't own enough. I need to buy more Google. I'm hoping it goes down to like maybe 280 or somewhere around there. I can start buying. You know, once you get to like 285, then I'm going to start keeping a closer eye on it. But I also need to build a cash position so I can buy even more. So $1,100, I'm up on the position. And then Netflix, which was my latest acquisition, I bought 12 shares, $995. So now I'm up already 14%, which is the current value is $1,100 right there. So these are all my positions. This is a screenshot of my portfolio from Fidelity. So it looks good. I think it looks good. Most of my positions are in the green, as you can see. Only 1, 2, 3 positions are in the red. Vici Properties, Pfizer, and Bitcoin. But Bitcoin, I'm good. I'm good. I'm holding. I'm holding for now. I'm holding for now. So you guys can see that, you know, this is a screenshot of my portfolio. So I don't know. So you guys can see the transparency, that I'm being very transparent. Let me see. KC. No, I have type 2s, ugly, big brother. Type 1, I've had over 60,000 injections to get me to today. Wow. Wow. Type 1 is something you're born with, right? All right, guys. I have to head to class, then lunch. All right. Take care, Casey. If you watch the replay, take care. You know, hope everything is well. It hits in early life. I was 18. Most type 1 get it around 4 to 8 years of life. Wow. He's Boogie. Okay, Team J, you talked me into add T-Row to the portfolio. Oh, wow. Wow. Just remember, you got to do your research too, though. You got to do your research too, Boogie. Because we just looked at a couple numbers, couple quick financials. You know, I like what I saw, but you got to do a deeper dive, most likely, if you want to hold the long term, especially for the dividend. If you want that nice 5% dividend yield, you know, you want to make sure that it's a company that long term you're gonna like a lot, you know, that you're gonna like holding long term. That is something that I've been learning along the way, to be honest with you, with my companies. Because some of the companies before, I will pick them just because I saw a few things that I kind of liked. And I didn't do deeper dives in it, you know, and I'm like, okay, I like this about this company. And, you know, I saw some revenue. Okay, you know, this looks good. This looks good. But I didn't do like a deeper dive. And, you know, so, and also learning about the company. I think that's very important, learning about the company. What they do and all that. Bringer of dividends, Jay, how happy are you with Fidelity? I use Robinhood and never had any problems with it. So far I've been very happy with Fidelity. No problems at all. I just wish I can track, what was it? The dividends a little bit better. What was it that I wanted from Fidelity with the dividends? Because like they don't have really like the total gain and loss right here. It's just in share price appreciation. Like they don't have the calculation with the dividend that you get paid from them, and the dividend that I've gotten paid from some of my companies. That's the only thing that I don't like. That I wish they had. You know, the numbers also with the dividend included. Oh, dímelo, Danny. Todo bien, todo bien. Nice, nice. Got here late. No worries, man. Even though I am getting off pretty soon because it's 9:40 already. Gotta go to the gym in the morning. So before I go to work. So yeah. Let me see. Monday was crazy. Glad I bought early. Nice. What did you buy on Monday though? Because Danny, you know what happened to me, man? I had meetings in the morning on Monday. So when I logged in, it was like 1 o'clock, somewhere around there. So I saw and I'm like, what happened to the stock market? How is it going up already? I thought it was gonna be doom and gloom Monday, you know? Oh man. But yeah, that's what happened to me. So I was like, you know what? Let me just not FOMO into anything. Let me just, I'll just let the day pass by. And I just bought my 1 share of SCHD. Now I'm at 387 shares. So that's all I bought, for the weekly challenge. And yeah, that was pretty much it. But man, I wish Meta was in the 620s, like it was showing us Sunday night. I was gonna deposit some from another account. I was gonna take some money and buy some Meta pretty much. But right now, I think what I'm gonna buy tomorrow, Danny, Sam brought it over earlier. It looks like I'm gonna be buying some Visa tomorrow. It's under 310 right now. It's at 307 in the after hours, so probably be around that price tomorrow. It's at a 23 forward PE, so I think I'm gonna buy some of this tomorrow with whatever cash I have left. I gotta take a look. I don't know. I don't even know how much cash I have left in my dividend portfolio. To be honest, I think it's like $20 or something like that. So I think I'm gonna spend it on Visa. We spoke about it earlier too, so I don't want to rant about it again. Yes, I'll do my homework first on T Rowe. Yeah, Boogie. But yeah, but it looks good. Looks good. 5% dividend yield. Looks pretty good. Every time I see T Rowe, I think of WP Carry. Not sure why, but I know WPC pays well and has a slow CAGR. Yeah, they do. Remember how crazy the futures were on Sunday? Yeah, they were crazy. They were crazy, man. That was a really turn of events, man. Especially by the time I logged in, I'm like, man, I should have I should have had somehow taken a break, maybe walked off of one of the meetings or something for a couple minutes. But yeah, but I was pretty much tied up, man, all morning. It was such a bummer. I bought 50 SoFi and 5 of Meta. Nice. Nice buys right there. A 628. Wow, I'm jealous of that one though. I'm jealous of that one. Yesterday I bought ZS and now ServiceNow. Wow, nice. That's good. Nice buys, nice buys. Not financial advice, guys. Just remember, nothing I say is financial advice. But nice buys right there. Man, Meta 628. I missed that. I missed that, Danny. I missed that. What's going on, Brain Chow? Oh, good here, man. I've been buying Procter & Gamble and SCHD. Nice buys. Nice buys. I like SCHD. And honestly, SCHD, hold on. Do I have any other topics? No, I think that was it. We spoke about the Yield Max SCHD ETF, the new partnership with Amazon and Uber, Netflix buying Ben Affleck's company. And then I showed you guys my portfolio. SCHD. Let me see where SCHD is at real quick. I'll show you guys in the camera real quick. And it is $31. So if it keeps going down, that would be great. If it keeps going down. SCHG. This is another one. I have a few dollars. I'm trying to build up a cash position in the Roth IRA because I want to buy VGT also, but SCHG has been on the downside as of lately. So I've been spending my cash on this one. Right now it's down 5.5% in the year to date. So I've just been buying, man. I've been spending my cash in the Roth IRA on this one, pretty much. Ah. So yeah. So this is what I have been buying as of lately in my Roth IRA. I also like Mercado Libre, to be honest with you. I like Meli. For my Roth IRA, I like VGT and I also like Mercado Libre. But yeah, nice buys right there. Nice buys. Let me see where the Bitcoin price is at. Let me see. It's oh, we went back down 69,000. Jeez. It's like 70,000, then it goes back down to the 60s, and then it goes back up to the 70s. There's been a lot of volatility in the Bitcoin, but I'm okay. I got my 26 shares. I'm good for now. Have a nice small percentage of my portfolio in Bitcoin just to see, and another small percentage of another portfolio in Ethereum, in the Ethereum ETF, which it has been. I think I have like 100 shares of the Ethereum ETF somewhere around there. I don't know, but it's in one of my other portfolios, and this one is down year to date 30%. So I have both. I think both are good for me to have some exposure in it. So I'm just holding for now. I'm gonna let the volatility do what they do best and just continue, holding for now. I'm just leaving it in the back burner. If it goes down to zero Bitcoin or Ethereum, which is what some people say 150,000, some 250, some 500,000, some a million. I'm just gonna let it, do its thing. And if it goes down to zero, well, I lost some money. It's a small percentage of my portfolio now. It's not that large, so I'm good. Um, for both, but hopefully it does go up in the long term. Brain Chop, SHD rebalancing on the 23rd of this month. Yeah, I'm waiting for it. I'm waiting for that, for the rebalance. I think I want to do something, like a live stream or something when they do the rebalance. I can't wait to see the SHD rebalance. Yeah, that's going to be good. Johnson & Johnson distributed dividends this. Oh, maybe that's why I have some cash, because I probably got the Johnson & Johnson dividends, so which I'm going to put it into Visa. You see why I don't have the drip on? Right now, Johnson & Johnson is on the upside a lot. So you see, it's up 46.5% in the last year. So that's why I'm like, I'm glad I have the drip off. And what I'm going to do is I'm going to put it into Visa. I think Visa is at a good opportunity right now. I would love to add Main Street Capital, but I'm going to wait for Friday video. I'll give you guys a quick heads up. Yeah, I think I'm going to buy more Main Street Capital this week. Boost up my income. I got to boost up my dividend income. I gotta bring it up to $1,000 in yearly dividends. I bought MO and SCHD. What is MO? Oh, Altria Group. High yield. 6.3%. Wow. 6.3%. Yeah, they should be good for the fun. Yeah. I hope so. Is Boogie. Yes, I got $320 from Johnson & Johnson. 320, Danny? What? That stock has been crazy in the last year. Yeah, has been crazy. Wow, $320 in dividends. That's great, man. That's great. I think Ford has no business surviving the screen. He gets kicked out. Probably will. Let me see. Do you think the rebalancing of SCHD will dump a bunch of energy stocks? Hopefully not, so he can continue to be on the upside. The energy stocks that SCHD holds, they're good companies. They're not bad companies. They're long-term companies. If you see, you have ConocoPhillips, you have Chevron. I don't think Chevron is gonna get kicked out. ConocoPhillips. What other one is energy here? Valero also. Maybe this one. Maybe Oniok. I think this one is also an energy one. Hershey has been on the run up as of lately too, after the cocoa prices started going down. It's only 1.2%. Lockheed Martin has been running up though. Let me see. Danny, that's great. I got 126. Wow, Boogie, 126 bucks. Nice. Holding Johnson and Johnson forever. Yeah, nice. Nice move. That's a good move. That's a good move. Johnson and Johnson, I think, is just, one of those companies that, you know, I think it will be forever. I think definitely Johnson and Johnson not going anywhere in my lifetime. I don't think so. But yeah. All right, guys. I think this is pretty much it. It's 9:50 already. I hope everybody hit the like button. There's 15 of you guys there. Maybe some of you guys are also just joining, which I feel bad, but I do have to go to sleep so I could go to work. Well, I gotta go to the gym in the morning. I gotta wake up a little bit earlier because I gotta do more cardio. I need to lose a little bit of weight for the summer. I gotta do that. Johnson and Johnson has a plant in my hometown. Nice. It has bought a huge plot for a second plant. Yeah. That's what I'm saying. Johnson and Johnson. Microsoft pays tomorrow getting $22 and will buy me one share of SoFi. Nice, nice. Buying more assets. I'm kind of like, since you guys have been mentioning SoFi and I've also seen some things, I'm kind of like getting a little bit more, what is it? I'm kind of liking a little bit more and more SoFi, to be honest. And I want to do like a deeper dive into SoFi, to be honest with you. I want to do a little deeper dive into SoFi. I just need to get familiar with their business model to see what it is. I'm getting familiar already with their earnings, and I know that it's a company that is growing still. So I know that they still have a lot of room to grow, but I would like to see and learn their business model a little bit more. I'm still buying SoFi. Nice, Boogie. Nice. Good night, Jay from Brainchild. Good night, Brainchild. But yeah, pretty much, guys, I think this is gonna be it. I got 16 likes already. That's awesome. Thank you to everyone that just showed up today. Really appreciate your support. I know everyone cannot make it because you guys work, have a life, everything. So, but if you're watching the replay, really, really appreciate your support. My live streams have been doing better than my videos, which is crazy. I've been getting more views on the live streams than in the videos, but I've been getting like, a lot more comfortable with the live stream. Good night from Miss Boogie. Good night, everyone. So yeah, I'm gonna see. I gotta try to be a little bit more active on X too. Okay, buddy, have a great night. Nice, Danny. I gotta be a little bit more active on X, but while I'm at work, it's just so difficult, But I would love to be active, more active on X. I do post some stuff over there, but I want to post a little bit more. All right, everyone, please don't forget to hit the like button. Subscribe to the channel if you're not subscribed, guys. Very, very important. Let me see. Did I get any new subscribers today? I think I have it here. But yeah. So subscribe to the channel if you're not subscribed so we can hang out in the next one. And yeah, let's see what other topics come up next weekend. Let me know there in the chat. You can also DM me on X so we can talk about any topics in here. I could probably look into it real quick, into something. We can talk about it. But yeah, I'm pretty much done for the night. Hope everyone has a good night. And like I always say, I hope you enjoy this one, guys.